I suppose one of the slightly surprising aspects is that this huge supply route, the Suez Canal and the Red Sea, despite now being closed for most of the quarter, we've not really seen potentially what in previous years might have been a colossal increase in prices, shortage of supply, and I think it's probably interesting to break that down. Why that's the case. So a couple of facts really. The first thing is that when we talk about the Suez Canal, essentially there's only one producer which is going from an east to west direction, and that's Qatar. So a couple of facts. The world's biggest exporter is the USA. Very closely behind we have Qatar and Australia. And then in fourth place we have Russia. So Qatar really was the only major producer supplying Europe from an east to west perspective and using the Suez Canal to export. However, US and Russian exports to Asia tended to favor going through the Suez Canal. So what we've seen is problems, of course, for the Qataris to get their LNG to Europe, but on the other side, and potentially even bigger, a closure of this important route for Russia, for the US. And so there's tended to be a sort of an element of what you might call basinization, where all things being equal, you would expect more cargoes to remain in the basin where they originated.
Rob, at the end of Q1 in 2024, Europe's underground gas storage facilities stood at over 50% of capacity. How much is it now, and where do you expect to see it at the start of next winter?
Yes, well, I mean, I was talking about the good fortune Europe has had with the weather, and I mentioned the dramatic demand side cuts implemented at a kind of government and European Commission level. And so where that leaves us now is underground storage levels in Europe are around 64% fullness. So this is really high for the time of year. In previous years, when we did not have these issues above us, we would quite often have expected to see, maybe 15, 20 points lower, 30, even lower percentage points fullness. But because of the clear imperative to get those strategic stocks filled up, and because of the measures I'd outlined and a little bit of luck from the weather, we're in a pretty good position Europe-wide, as I said, 64 percentage points. And we currently estimate that we could see fullness, total fullness, 100% fullness, by the second half of August this year, which would be very, very early. Last year, we were at 95% fullness by the very end of September, which was pretty good. And in previous years, sometimes we've not really got anywhere near that level. So very good from that point of view. And of course, when European market participants understand that the storage issue is easier and is in a healthy state, that does also remove some of the demand on the LNG, which could then go to other markets globally.
Okay.